Hello and welcome to this episode of the GrowVC Everyone Funding Startups podcast. Even though the change we are driving with our funding community is new, crowdfunding in itself is a phenomenon that has been around for ages, and its applications are vast to say the least. I'm your host Marcus, and I'm here with Steve Cinelli, founder of marq, and somewhat of an expert in the field of crowdfunding during the last decade. So, Steve, would you introduce yourself to our audience?
Good morning, Marcus. This is Steve Cinelli, and by way of introduction, I'm a native San Franciscan. Been out in the West Coast and Silicon Valley most of my life. My career evolved through various elements of banking, investment banking, venture capital, and private equity, and have basically financed most companies, whether they be technology, early stage, through large-scale manufacturing companies, airlines, sports franchises, retailers, and the like. So I've got a pretty good sense of financing. A number of years ago, I moved on from conventional banking and started wearing an entrepreneur hat, and ended up founding a company which I think was the only and predominant crowdfunding platform that the country had known at the time. This was a company by the name of Offroad Capital, which we founded in 1998.
It seems that there has almost been a 180-degree shift in mentality towards crowdfunding in the last few years. So how has the field developed during the past decade or so?
Crowdfunding, and I think the term crowdfunding is something relatively novel, but for the most part, Offroad Capital was a crowdfunding entity. What we ended up doing is building a private capital market system whereby we had a secured network. We aggregated, I think we had about 12,000 investors at one time, and we would work with companies that were interested in raising anywhere from $2 million to $15 million of growth capital. We would package those companies up and bring them into our market, and the investor community would review those investments. They would, if they were interested, they could bid, and then we would settle the transaction. We would have the winning bids come in because we ran an auction pricing mechanism, and the bidders that were selected would end up closing and owning a portion of that company. We use technology. I'd take a step back, and I'll try to entwine the term crowdfunding. The use of technology really enables you to do some things you couldn't do in the past. Whether it's crowdfunding or just raising money, that's historically been a very analog effort. Someone's trying to raise money from one investor, then he goes to another investor and then another investor and challenges. You're telling the same story 3 times to 3 different people. What technology enabled us to do at Offroad is to tell the story once in a very comprehensive, robust way to literally thousands of investors at a time. Some of our successes, we could raise $15 million in as small an increment as $25,000 in about 3 days. And then because we created standards around disclosures, we created standards around the documentation, the transaction documentation, the deal structures. Everything was sort of could be consummated very, very rapidly. So that's sort of a thumbnail sketch of Offroad. We worked as we developed it very, very closely with the SEC, because in the area of private placements, particularly those areas that work under certain exemptions, we worked under the exemption of selling securities only to so-called accredited investors under Reg D. So it was really a wild, wild west at the time. And so what we did was bring consistency, standards, best practices into the space, and it worked very, very well. We ended up selling the business. So that's sort of It was a very early approach to, as you described, crowdfunding. I think it was a very comprehensive. We played a lot of different roles. I think one role certainly was the trading platform role, the means by which everyone aggregated. We served as an investment bank on one side, creating the product. We served as an investor relations or brokerage, aggregating investors and working with them. And then we served as our own somewhat regulator in terms of setting the rules of the game and rules of engagement within our own market. And maybe just as a quick segue, currently I'm working on a similar market called Primark, Primarq, which has a lot of the same elements as Offroad, which is a closed virtual market to accredited investors. But the asset class, rather than emerging growth companies, is really looking at residential real estate equity under what are called equity sharing transactions. What we're doing here is to avail third-party equity capital into the housing finance industry. Housing finance, whether it's in the U.S. or Europe, UK, whatever, has largely been built upon the use of excessive levels of mortgage debt, which with the corrections and now the banks in their situation is not a very prudent way to go. So Primark actually allows accredited investors to come in, co-invest in homes, owner-occupied homes, along with the owner, and share in the ownership on some minor and passive basis. So what it does is reduce the level of debt that a homeowner or home buyer has to take on to buy a home. With the lower level of debt, there's lower payments, which means the home becomes more affordable and you create more sustainable home ownership. The investor benefits by participating alongside someone with like-minded interests, namely an owner. It's a real asset class. Residential real estate, at least in the United States, is the second largest asset class at about $15 trillion. But it's tough to get exposure to the pricing index. This is a means by which you can do that. And there's inherent benefits in the structure. Most home purchases do include a level of leverage, so the investor participates in a leveraged investment to get improved returns with the leverage. We have some unique tax efficiencies built into the program. And then just like Offroad, which I didn't share with you, part of the model is to enable those investors in whether it's a company under Offroad or in a property investment under Primark. Our market allows for those interests, those equity interests, to actually be returned and retendered into the market as we also run a secondary market. So in the case of Offroad, an investor could come in, sell his interest, and not require the company to go public or to be sold for him to monetize. Same thing with Primark. An investor could come in and not force the house to be sold or to be refinanced to monetize his interest. So the secondary market is a key aspect of, in my view, creating a good crowdfunding platform. So that's sort of a thumbnail sketch, a little long-winded.
How much time had passed in between starting Offroad and Primark?
Yeah, Offroad was sold in about 2001.
Okay.
And then we conceived of and started the architecture process of Primark probably the beginning of 2009.
How did the overall mentality or reception to Offroad and Primark change or evolve in that decade, since they do have many of the same elements? Both are in investing for a niche market, and like you described, they have similar components and architecture.
It's interesting reception. One of the things that we saw in Offroad, and we see the same thing in Primark, is investing in an online fashion invest